Good morning, everybody. This is Johnny Seville. This is your executive summary for stock setups today, the Thursday, the 30th of June. We are obviously now the next D Day, which is the final day before open range of July, sets tomorrow, which of course is just before the long weekend. So very, very interesting market still. Let me give you a quick summary of where we're at. Of course, a wonderful week of volatility. Let's have a look at the S&P 500's pattern, which I explained yesterday in the big one and in patterns and probabilities. But for those of you who couldn't join us, here's a quick rundown of what we discussed. Basically, we've had this upward channel in the S&P 500 on the weekly chart. We can see that's broken down, and what we now have is we have a head and shoulders. So we created a head and shoulder breaking down from this channel. We then created a downward channel in the small time frame of the weekly channel. So we went with down frame. A down channel is measured like that. So then we extended like that. We rallied up. We then now we are creating a downward expanding range triangle, which means at the highest I'd expect the market to go would be up around the 2090, basically up into that resistance, maybe as much as 2095, but basically that's going to fill that resistance. And then we're basically looking at, or I guess, yeah, 2100 even, because when I'm looking at this, the wrong candle here, so 2100 would be the top here, and then we're looking for another large decline to hopefully occur next week, which means what we want to happen is we want open range to essentially set right at the top here. We want resistance being open range to be at resistance in the market. So then when it closes below there, hopefully say Tuesday or Wednesday next week, that means we get a confirmation of the open range break to the downside, and then we have all that room down to go. Now, I wanted to point out the potential. So, of course, what that would mean is that we've got a nice little possible rally or drop, I should say, whoops, from that area. And then that would take us down to, drop here, rally up, and then down to there. Okay, so that's the macro most bearish argument that we can get. Okay, but now let's play the bullish argument. Let's go back to the daily chart. What if it doesn't do that? What if it doesn't get just completely crashed and this is just yet another correction? Well, I mean, there is the bull argument that we actually have an inverse head and shoulders, right? That the actual head and shoulders is sending us to the bullish direction. But even if that were the case, and this is a credible argument, even if we've got our left shoulder here, our head here, and we are yet to form, we are yet to form a right shoulder. So we still need that to complete, which means the S&P still needs to go to 1900 before it can then continue back up to 2400 or whatever the case might be. So either way, whether we're bullish or bearish, both scenarios seem to suggest that we are set for a 100-point drop. Now, a 100-point drop from where we are at currently would be a 10% move on the S&P 500, which in fact, if you look back at history, we go back to the last 2 years, you'll see that all of those different drops we've had before, which we predicted, mind you. These were all when we last did big ones, was in Christmas of last year, in July of last year, and of course you can see again there's that same potential move about to happen. So at least we should still hopefully get a 100-point drop to the downside, which is more than enough to make some small fortunes off of. So this is exactly why we are doing the big one again right now. And by the way, for those of you who missed it, we'll be sending you a quick little snapshot video of what you missed today. Still a chance to enroll in that if you're wanting to get involved. So we'll make sure we get a little snapshot of what we covered. It was absolutely incredible. It blew everyone's mind. So anyway, we'll get that off to you later today. But anyway, so moving on. These are some of the things that we talked about and things that we want to be aware of. So going into looking at the volume, again, we'll just zoom in a little bit here, you can see that the volume down 7.6 billion. 5.445 billion, so 13 billion down. The volume up so far, only 8.5 billion. Volume is nothing. All the news you read says Brexit, schmexit. It's all. Was it just a bad dream? Brexit's already over. Markets have already recovered all their gains. BS. Like, what a load of crap. The volume has been nothing compared to the drop. And if you look at a lot of stocks, they aren't rallying hard at all. I mean, they're just simply popping up into resistance. Most of the stocks that are rallying are in the New York Stock Exchange, and they're the more manipulated stocks. And they are just, again, that these are not momentum moves. These are not powerful moves. They're just simply recovering. Now, could we recover? Could this continue up to 2200 from here? Sure. I mean, I've seen stranger things happen, but it just doesn't seem likely. Not when we see that that when we look at when we look at the insiders and we look at the last 90 days, we see that everyone is selling. Then we look at the one moment here. Then we look at last 30 days, everyone's selling. Right, this is just the last 30 days. You can see huge amounts of selling. So I mean, I just do not see the this buying that they speak of, that everyone's apparently really interested in. And again, one other thing that we can also look at, which I was showing people last night, was watching my own executive summaries. Look at that. Isn't that vain of me? Anyway, here we go. Let's go to shortsqueeze.com and we have a look at the SPY. Bam, there you go. You see the SPY actually increased 6% more, a 6% increase of the amount of stocks being shorted in the rally yesterday. So that doesn't sound like buying to me either. Sounds like people are still very bearish on this market. Okay, so let's go and have a look at the existing stocks. So some of the newer ones that we just alerted you to, I wanted to put out some stop losses and so forth on these. On SNX, again, show me the rally in this stock. Show me the massive strength coming back into this company over the last 2 days. I don't see it, do you? It's still a beautiful head and shoulders. This was one of our alerts earlier this week. Still looks great. And I would be looking... Of course, we alerted these were the August puts, August $95 puts, or the December $95 puts. Excuse me. Yes, sorry. So yes, the $95 August puts or the December $70 puts were the two we liked on this one. Now, in terms of looking at the management of the trade, I'd look at a stop just above 101, so say 101.33. I'd look at a target of 57.13. So there's about a $9 risk on this potential trade, whereas there is about a $33 potential reward. So we've got or more. So we have at least a 3-to-1 risk reward ratio on the grander scheme of this. So this one looks really good. LITE, light. This one is also a head and shoulders pattern. You can see that this one looks really strong. Now, we're still waiting for an entry point on this one. I want this to break. I don't want this to break below 21.87. And if and when it did, I'd look at a target of 16.86. So basically a $5 drop or about 25%. That's pretty damn good. Stop would be at 24.03, and I'd quickly be dropping that down to just kind of above where this candle is once we get some clearage away from that stop loss zone. So there's light. Now, of course, light, we talked about the August 22.50 puts. XYL, this is broken down nicely. Again, show me the really bullish stock here. Don't see it. It's just kind of rallied up into the 9-day moving average. And look at the volume, 2.88 million down, 1.68 million down. Let's just call it even and say 4.5, right? 4.5 million shares down. Then what have we got on the way up? 2.7. Yeah, I don't necessarily agree that we've recovered this drop, but anyway, it's right underneath resistance, so it's looking good. I look at a stop loss at 45.57. My target 1 is 38.33. Target 2 is 35.33. And again, it could be much worse than that, but we want to at least have a target in mind. We can always adjust it later. WDAY is really Um, I mean, again, Tuesday, market rallied. This didn't go anywhere. Not a recovery at all. 1.67 million. Today, yesterday, I should say, it had a bit of a push up. It went up 4.48% right into resistance. And now, again, remember, the entry criteria we were looking for on this was an entry around the $75 zone. So we're actually just approaching that entry zone at the moment. Now, I have already picked up a small amount of puts just to start scaling in. But again, the entry criteria, if you recall from summary, was the 75 zone. So we're just pressing up into that now. You can see the exponential moving average is at 74.82. So just basically around that price or just underneath is where I'd look for a potential entry on WDAY. The ba, 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 ba. Yeah, I would look at, so that basically gives us, I look at a stop loss at 78.13, so that gives us roughly about a $3 risk, and my target would be 61.83, which gives us ample opportunity. So that is going to be 10, let's think, 10, 13, $13 of potential reward for a $3 risk. I definitely think that's worth it. So, yep. Let's have a look at Rambus. RMBS. Now the confirmation again. This is one that I also bought a couple of puts in. Started scaling into this position. Again, you can see this had no real lift in the market. We got 574,000 shares, 395,000 shares yesterday versus the 650 and 3.4 million on Friday. So yeah, this isn't going anywhere. But anyway, remember the confirmation entry point. Again, I picked up some cheap options because I wanted to just have a small position in this. In case everything just plummeted. But the entry point on this is a break of 11.13, so just remember that. But that's what we're looking for. The confirmation is a break of 11.17. Stop is at the moment I put it 12.23 on my existing position, my small position I've already taken. But as soon as we break down, I'll buy some more, a more substantial position, and I would adjust the stop loss then to 11.82 once we break below that entry target. My current target one is $9.13. Target 2 is $6.43. The $6.43, if you're wondering where that comes from, is the extension of the larger Head and Shoulders of this Head and Shoulders with inside. Golly gosh. Okay, let's keep going. All right. I think these markets are going to keep us busy. AVGO, Broadcom. I really like this one. This one has rallied, and this is probably the one stock out of the list recently that's actually been a lot more bullish than others. So we've got 3.8 million on the downside, then 3.7 up yesterday, 4.79. Oh, sorry, yesterday was 4.79. So this one's a bit more bullish than the rest. So we want to give this, I'd give this a little bit of room. I'd look at a stop criteria just above this candle, which is at 158.63. So I'd look at a stop loss at 158.93. And if it goes through that, then so be it. Exit the trade. And really, that's not bad at all. When we're talking about an entry point that we got into, what was it, around 149 when we entered those puts, and a stop loss at 158. That's only a $9 stop loss on a $158 stock. So that's 8% of a stop loss. Considering that our target is 117.23, then again that is a risk reward ratio I would take any day. That's about a $45 potential risk for a $9 reward. I mean, you do the math. That's again. So if you say, but we're buying options, and an 8% move on the stock, is too much of a loss. I mean, I'm eating it right now with this stock up 2 days. Well, I mean, that's the wrong attitude, because you shouldn't have so much invested in an option that this kind of a move is something that you can't easily withstand. Just remember that for capital allocation, you need to adjust. You should really be looking at how you invest in options versus stock. So let's say I invest $10,000 into a stock, then I might invest $400 into an option, or $800 into an option. It's a completely different strategy, because depending on how risky the option is, I basically think about how much I'm willing to lose in a stock position, and then that's how much I invest into the option position. So that's just something that you really need to be aware of. So that's just one thing to consider. So again, if it's a less risky option, and we're buying something that expires 6 months away, where we know that we're buying time value, well then maybe instead of if I put 10 grand normally into a stock, maybe I'll put 4,000 into an option. But these are the things you've got to consider: is that if the stock goes up, if the option goes up to the stop loss, that you're not going to lose more than you would normally be losing in a stock position. Really important you consider capital allocation, and that's the last time I'm going to mention it for this week. So anyway, there you go. So there's AVGO, so targets 117.23, stop criteria 158.93, DLPH. This one real easy. This is again a declining Head and Shoulders. Looks beautiful. Just starting to break down now out of this other smaller Head and Shoulders. Lots of stuff going on with this stock. But my target one here is $47, which is when it's going to hit this. And my second target. Oh no, my second target we'll see. I think that the market's going to hit that 1900 level on the S&P 500 by then, and that's when I'd take profit on this regardless, because then we might get that rally back up. If there is an inverse Head and Shoulders, or but there'll be enough people wondering if it is that we'll get some level of buying. So I wouldn't be contesting that and rolling the dice. I'd take profit and wait for it to break down. My stop criteria here would be 66.13. So again, we've got tons of opportunity. $4 of risk from where we're currently at with to the stop criteria, whereas we've got $15 of reward. So yeah, it works almost 3 to 1. All right, so on to a couple of other things. The earnings play, AVAV. These guys did report better than expected. Let's have a look what's going on here. Oh, sorry, AVAV. Oh, that was a big win. Sorry, this was the earnings play. As you can see, that closed right at the bottom of the range yesterday. Really happy with that. Sorry, I was thinking of a different one. PRGS, I think pierogies. Delicious. So these guys, reported after market, and they actually reported better than expected. But I don't think that's going to make much difference if this market collapses next week. So I'm going to hold on to my puts on this one for a couple more days and see what happens. So we should basically, if we open around 26 and hold and close beneath that, that's a very good sign, and that could still just break down. So I'm not too concerned with that. I'm going to hold that for a few more days. It's only a very small position anyway. It's the money that I invested in that was money I had already written off. It was, as I said, it would be the same money that I would normally have as a stop loss on a trade, was how much I put into this. So in fact, it was about probably half of that. So even if I lost all my money in this trade, it's money that I already was happy to lose. So I'm happy to let this ride, and on the backs of the potential weakness in the market coming up with open range ahead. Let's have a look at now. Again, look at these stocks as we go through these. BGCP, beautiful. Head and Shoulders dropped, rallied into resistance. Holding perfectly at the moment. IT, beautiful, holding puts in this straight down. 443,000, 744,000. Then we've had some volume up here, which has been strong, but it hasn't recovered anywhere near the move as it runs straight into that resistance. Money flow is still quite negative. Obviously, IT was one of the ones that we took about half profit anyway on Monday, so we're really just playing with house money at this point anyway. IMAX I would take profit on. I don't think there's much left in this move. We're kind of coming down to support as it is, and there was strong volume yesterday. It was 1 million over the previous day's 531,000. So I'd just kill IMAX. There's tons of good trades out there, so I wouldn't waste time with ones that aren't perfect. PCAR, this looks great. This is almost nearing its target though. Almost reached it last week, but the volume up here was 3.48 over 2.34 versus 9.66 and 6.45 down. So no real volume in this. Again, rallying right into resistance. hasn't even broken the high of Monday's candle, let alone come anywhere close to Friday yet. So yeah, liking that one. GRA, really like this one. This is in the specialty chemical space, which is the where we have the highest amount of insider trading, which is where the hell is that? That's my other. I got too many damn windows. Um, do, 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 do. Yeah, so there we go. So the highest amount of selling is in basic materials, but basic materials is also one of the smallest sectors. So what if the smallest sector compared to healthcare, it's about a quarter of the size. So if you get twice the amount, well, if you get more insider selling in basic materials than healthcare, when healthcare is 5 times the size or 4 times the size, this is basically on a weighted scale 400% more significant than the healthcare selling, which puts basic materials, kind of up at a league of its own. Like, like we can't even. I don't even have enough screen space. Like this is the kind of the bar that if you want to compare it, it doesn't even fit. It'd be off the chart. So. Specialty chemical, definitely something that we want to look at. As you see, the insider selling happening there. So specialty chemicals, GRA, which has been on our list for a while, is one of our favorites. Really looking good, and as well, look at the way it traded Monday. 1.08 million on Friday, 533,000 on Monday. Tuesday didn't even go up. Went actually down 0.53%. Yesterday, tiny volume, 371,000, and only went up 1.7% right into resistance. Looks really good. DF, Dean Foods, don't like it. This one I would kill as well. Just, I mean, it looks like it's oscillating in a downward channel. I mean, I don't have time for that, so I prefer to be in other stocks that don't give me such an eyebrow raise. And ROP looks great. I would adjust the target though because it's not breaking down as early as we thought. So it's kind of coming a breakdown at that point, which means my target would be lower. So instead of at 161, I'd actually adjust the target lower to 158.33. And that's basically it for now. We'll obviously have another executive summary for you tonight. But the big I was going to say the big one. Well, there will be a big one announcement over the weekend. But the next executive summary will really be of lots of value. Will really be once we've seen open range set. So watch for over the weekend for a special Independence Day announcement for potential new trade alerts. And once again, keep an eye on your email. We'll be sending you a clip of what you missed in the big one last night with one last chance to get enrolled before we announce our top favorite big one picks over the weekend. All right. Well, have a wonderful rest of your day. And to our friends in Canada, happy Canada Day tomorrow, and for everyone in the US, happy Independence Day for Monday. It's going to be a nice long weekend. Rest up, enjoy it. We've got a hell of a week coming next week. Take care.